All right. So basically, as Connor said, we're going to be giving you guys an update on our position with Constellation Brands. This is based off of our own research that we've been doing over the past couple of weeks, as well as that talk we had with them last week. And I'm going to hand it off to Jack right away.
Okay. So our position within Constellation Brands right now is we own 66 shares at a purchase price of $178.91. So that's just around $12,000 in total equity. To be exact, 11,808. So throughout 2020, Constellation Brands has experienced like a lot of volatility in with like Corona and everything like that, and supply chains being shut down, and like international panic. But we've come to the conclusion, our research group has, that this is a really strong hold for us. Definitely not strong enough to buy anymore, but definitely not weak enough to sell. So if we were to sell right now, we would have a realized gain of 8.3% because the stock trades at 195.20. So yeah, this investment group has had the opportunity on Wednesday of last week to talk to the investor relations team there, and I think their CFO was there as well, just for a brief bit. But yeah, so some of the stuff that we talked about will be shared in the presentation. So with that, I'll hand it off to Casey.
Okay, so a little bit about Constellation Brands. They're a distributor and marketer of beer, wines, and spirits across the world. Their main operations are in the US, though, and this basically comes down to their headquarters being in the US and a lot of their licenses being exclusive to the US. They also have a lot of operations in Mexico, New Zealand, and Italy. And a lot of that comes down to, with Mexico, they have breweries down there. And in New Zealand and Italy, they have a lot of wineries and vineyards. It's also a notable thing to say that they own a significant amount in Canopy Growth, which is a marijuana company. And their main strategy is basically to go towards a premiumization of brands. So that's just finding appealing brands and products to consumers that are higher quality or premium. Their beer accounts for about 65% of their net sales, which is very notable. And their wines account for about 30%, with their spirits coming in last at about 5% of their net sales. Some of their main products, I'm sure a lot of you people already know of, are Corona. So that includes the Corona Premier, Corona Extra, Light, Refresca, and their hard seltzers. Modelo, which includes Modelo Especial and Modelo Negra. Kim Crawford, which is a wine brand. Casa Noble, which is a tequila. Svedka, which is vodka. And they also have another big one is High West, which is whiskey. In terms of their main competitors, Anheuser-Busch and Boston Beer Company are probably their biggest competitors. Busch currently owns in their portfolio Budweiser, Bud Light, Michelob, Busch Natural Light, and a variety of seltzers. Boston Beer Company, they own a portfolio which includes Sam Adams, Angry Orchard, Truly Hard Seltzer, and Twisted Tea. And then their other biggest competitor in terms of beer would be Molson Coors, and they own a wide variety of products from Coors to Blue Moon, Henry's Hard Soda, Keystone, Miller, Molson, and Vizzy Hard Seltzer. In terms of their wine and spirits competition, some of those brands are their competitors in that as well, but I'd say that their main competitors would be E&J Gallo Winery, Diageo, I don't know how to pronounce that, and for their cannabis industry with their holdings in Canopy Growth, their main competitors probably Aurora Cannabis, and then also like Cronos, Afria, or Tilray.
So as Casey said, Constellation Brands has an established, well-recognized portfolio of beer, wine, and spirits. Their most well-recognized would be Modelo and Corona, which are the number one and number two selling imported beers, respectively. Despite the global pandemic, Constellation Brands has continued to grow and expand, proving that they can still be successful during hard times. With a forecast target price of an outstanding $226.68. We have good reason to remain bullish on Constellation Brands as they will continue to be proven successful for us. And we believe Constellation Brands to be undervalued because Constellation Brands has proven that they understand consumer demographics and they take opportunities of growth. And with their strong financial structure, despite the amount of debt that they have at the moment, we still believe that Constellation Brands should be a hold. And with that, I'll pass it on to Matt.
Like Owen said, we believe Constellation Brands is a hold for a few reasons, and one of them being their understanding of consumer demographics. They have a specific appeal to the Hispanic and millennial population. And in regards to the Hispanic population, this is a point emphasized by Constellation a lot, and they mentioned it last week as well. Their portfolio of Mexican beers, Corona, Modelo, are marketed towards and appeal to the Hispanic U.S. population more so than other beer. The percentage of consumers and the percentage of consumers that are Hispanic that purchase Corona and Modelo are around 15% higher than competing beers. Like the percentage of people who buy those beers are about 15% more for Corona and Modelo than, say, Bud Light or Heineken. And Hispanics are also a growing part of the U.S. population. So brands like Corona and Modelo are poised for long-term growth. And on the other hand, for millennials, instead of for the millennial population, last week they mentioned that they're just releasing a commercial with Snoop Dogg. And you would think that with coronavirus, there would be a negative connotation related to the beer. But last week they mentioned that because of things like online, memes and stuff like that, there actually has been a positive connotation, especially with the younger generations. And, people are holding things like Corona parties. And this is a good way to market towards the younger generation since Constellation Brands portfolio, it usually appeals to an older generation. And along with people, staying at home and enjoying nicer beers, a trend we've been seeing where people are willing to spend. Another big trend that we're seeing in the future is premiumization, where people are willing to spend more money on a product that emphasizes superior quality and exclusivity. And since people can't go out to special events, they're finding out that people will instead opt for a nicer beer and stay at home. And so they're willing to spend a little more money on a little nicer beer. And they're also focusing on triple threat consumers, which is just a term I made up for people who buy all three sectors of the product, which are beer, wine, and spirits. And if you see on that little bar graph on the right, in the dark blue, the majority of people who buy Constellation Brands products end up buying all three, beer, wine, and spirits. And they end up spending, a significantly amount more money on average than people who just buy two or one type of product. And second reason is Constellation recognizes many opportunities for growth. The first part is seltzers. We all know that the past couple of years has been a huge wave for seltzers, and brands such as White Claws and Truly's have already made recognizable brands. This year, Constellation released Corona Hard Seltzer, and so far it's been a success, and they've managed to make a recognizable footprint in this seltzer wave. And there's also a couple new avenues for growth in this section where they can release new flavors. They can release boxes with just one flavor in the package. And so, Corona Hard Seltzer is probably going to be here to stay for a while. And another big opportunity for growth is Canopy Growth Company. We all know that Constellation owns a majority stake in a marijuana company called, Canopy Growth. And we've all seen how the marijuana industry has really blown up these past few years. And with, marijuana potentially being federally legal very soon, there's a lot of growth for the US market in regards to marijuana. And also recently, Canopy Growth Company has released a line of cannabis beverages. These are already on the shelves in Canada right now, and they're doing really well. Last week, they mentioned that they believe this is going to be the next big wave of products, even bigger than seltzers are right now. And this is an opportunity to appeal to an older generation of consumers who would normally be reluctant to, smoke marijuana. They might be more willing to have a drink, have a beer infused with marijuana instead. And that could potentially introduce some older people into buying cannabis products. And the third big opportunity that Constellation has been looking at is they recently invested in this company called Acreage Holdings. And instead of this being a company where they grow marijuana and sell it, they own prime and key real estate and properties to then lease or to sell to other companies to grow marijuana and distribute it. And we all know that the competition for the marijuana industry just keeps on increasing. So this could be a good opportunity for Constellation to have a solid foothold in the industry without having to compete as much with other companies. And now the financials. Right now, Constellation Brands is facing over $734 million in CP Ltd, which stands for current portion of long-term debt, which is basically the amount of long-term debt that has to be paid within the year. So this is how much they have to pay within the next year. So this is pretty much short-term debt. And despite this, Constellation has managed to increase their current ratio, which is current assets divided by current liabilities. Last year in 2019, it was 1.16. And this year they've raised it to 1.85 in Q3 of 2020. And this basically tells us that this gives us an idea of the firm's ability to meet its short-term obligations. A good current ratio is usually between like 1.2 and 2. So this is definitely on the higher end of that. And this puts Constellation in a good spot for their current assets. And their focus this year has been to increase cash and accounts receivables. And the increase of cash and accounts receivables explains the increase in the current ratio. And this, in combination with no short-term borrowing in Q2 and Q3 of 2020, provides the ability to slowly pay off their short-term debt and their current portion of long-term debt.
So this next slide here is just the graph for you guys, the revenue that was explained prior. As you can tell, the beer is, like Casey said, $5,615 of the $8,633 in their net sales. Wine, spirits, and Canopy. What we like to see is that these numbers are increasing year over year. So this is just kind of to visualize that for you. Another thing that we like to do when valuing a company is looking at a DCF model. What a DCF model does in its simplest form, I know this looks pretty crazy, but what it does is it basically forecasts out different things like the company's assets and liabilities and prices it back to current value. Because obviously when you're trying to determine how well off a company is today, you want to think how they're going to do in the future. The only problem with that is nobody really knows the numbers for the future. So what this does is it basically takes estimate numbers and estimate percentages year over year, and it discounts that number back to current day's value. So like I said, it helps you determine the intrinsic value of Constellation Brands with the 5-year free cash flow forecasted priced in. The sum present value of free cash flow shows that once capital expenditures has been accounted for, Constellation Brands has a remaining balance, which would be helpful in doing things such as paying off debt, reinvestment, and more. The big number to take from a DCF model is that bottom number I have here saying equity value per share. So that equity value per share basically takes into account all those future numbers that I just spoke about and discounts it to today and says that we value, based off the financials alone, we value this company at $226 per share. Just as a bit of a disclaimer, this does not mean, yes, buy Constellation Brands today because they're worth $226. Because obviously there's a lot of other things you have to take into account when valuing the company, such as, the things like general market trends and the sector itself. So we believe that this company, based off of its financials alone, is worth $226 per share. And based off of today's price of $195 per share, we're bullish on Constellation Brands, saying that they are undervalued as a company.
Okay, so Constellation Brand obviously has a lot of strengths. Constellation Brand utilizes their inside and outside resources, which allow them to deliver their value to the consumer. They do a very good job with their product innovation, like it's been touched on, that they adapt to their industry with their seltzers. They also have room for growth there with their BioSteel energy drinks and THC and CBD infused beverages. They have high margins because of their premium products. and they have consistent growth in gross profit from 2008 until currently. Some weaknesses that we discovered is, like he said earlier, Constellation Brand carries a lot more debt, especially when compared to their competitors. Their number of days in working capital increased from 2019 to 2020, which suggests their sales may be decreasing, where they're not efficiently collecting their receivables. And their current liquid asset ratios show that they could use their cash still more effectively. Okay, so there's a lot of opportunities in the industry. So one of the opportunities that we discovered is there's a trend in increased consumer spending. Like Ben touched on, a lot more people are willing to spend more money on a premium product. So they have a lot of emerging markets with their THC and CBD infused beverages. They talked about Spike Coffee when we were in our meeting with them, and their BioSteel sports drink, which is actually really taking off, is currently used by 28 NHL franchises, 14 NBA organizations, 18 MLB teams, and 30 out of 50 of the world's top golfers, and it's still expanding. And you see e-commerce there. When we were in a meeting with them, they were talking about how they were potentially going to transition to selling some products online as well. So threats, they have a lot of strong competitors, like Casey touched on. Boston, and their competitors are honestly more financially stable, like Boston Beer. They actually carry no debt. They have complications. They had complications and probably will still continue to have complications with COVID and regulations. Example of that would be they spent $1.4 billion on a building at a brewery in Mexico, which was never even opened because of regulations there. And seasonal sales is also like a pretty big thing in this industry. As you can see, there's a chart there. It shows like the wine sales and the beer sales based on like the different seasons. And with that, I'll pass it on.
So to sum up this presentation, Constellation Brands has passed our SWOT test, and based on our financial analysis, like I said before, we believe that we should hold Constellation. As stated, for opportunities in the future, we are very optimistic on the alcohol industry. One of those main being is their prevalent success during a global pandemic. And even with their pandemic and bars and public facilities not being open right now due to COVID-19, they still managed to beat their earnings in quarter 2 to quarter 3, which shows that Constellation Brands can still be successful. Now, the industry that Constellation Brands is in, the alcohol industry, is one led by innovation, and a lot of success that Constellation Brands has had was with their new hard seltzer Corona, which proves made a big dent in the seltzer industry and has proved very successful to them. We believe that the next step that they can make to their new innovation will be the cannabis THC infused drinks introduced by Canopy Growth. The market in Canada has already proven to be very, very successful, as they sold 1.7 million cans already just after months of release. They have about 74% of total cannabis sales in Canada alone right now. And we believe that they can reach a new market in America for people who would like to try cannabis but will not want to take up smoking. So these new THC infused drinks can introduce a new market. And the United States, so far, 15 states have legalized marijuana. And we expect this number to continue to rise until it is fully legalized in the United States.
All right, and with that, we open up to questions, if you guys have any.
I know you talked about like the premiumization of beers at one point, and I was just wondering if you guys think they're running out of space for premiumization, as so many craft breweries are popping up where that's really the premiumized beer. Now, like, they can't charge the same as a craft brewery does, so they really have like a tight market for that. Just wonder what your thoughts are.
Can touch on that. So we actually talked to them about craft beers in the investor presentation, and basically what it came down to is, since they can't really get into the craft beer market, just because it's such a local thing, that people would honestly prefer to buy like more local and homegrown type stuff. So since they can't really get into that, The premiumization of things like Corona or some of their other brands tends to work out better, especially because it's something that's large scale and kind of like the most premium that they can get. Does that answer your question?
Yeah, kind of.
I could touch on it a little bit more. A lot of it has to do with the branding of the product. So they mentioned last week that, you know, instead people aren't able to attend special events. I asked whether they see this trend, you know, being applied to all sectors moving forward. And they said they don't see it going anywhere, that people can't go to special events. So they opt to have a nice, you know, a nicer-ish beer at home. And not everyone can make it to a craft brewery. I can't speak English. Brewery. You know what I mean?
Yeah, the big thing there is just they're trying to convert the normal consumer into premiumization and buying that more expensive beer or spirit or whatever it is. And they're probably going to buy what they see on the shelf rather at like you know, one of these liquor stores rather than going to this craft brewery is what they're saying.
Okay, so they're not trying to convert anybody that normally goes to like craft breweries.
No, they're more so focusing on the normal consumer that'll buy like your what the trend is that you're seeing is people that buy like your normal beers, like your Coors Lights and your Bud Lights. They're scaling up and buying these more expensive beers. So they're looking to take that consumer rather than converting people that are those, you know, craft beer loyalists or whatever it is.
Okay.
I couldn't make it this year to the presentation, but I remember last year they were talking about how they were actually selling off their stake in, was it Ballast Point? That was a craft brewery that they owned, but didn't they? I remember them also saying something about how craft breweries might have actually been past their peak, and that people who normally go to craft breweries are switching to seltzers. Did you hear anything about that? Any discussion on that? Am I remembering that wrong?
Well, the market for seltzers is definitely growing, and just in, you know, in general with what a market is, then yeah, a lot of people are switching from craft breweries to more, you know, buying your IPAs and buying your seltzers as well, just over in the past year.
Nick, did I miss? Did you talk about the valuation that you use?
Yeah, the DCF model.
Yeah.
Yes, I can go back to that.
Yeah.
But we
Can you
basically
go back to that and maybe explain that a little more.
Yeah.
So that everybody can understand what you're. I mean, I knew what you were saying, and sometimes we need to take a minute and share what this means and what does it mean?
Right. So basically, what I did was in this slide here. What a DCF model tries to do is it tries to create a current present value based off of future information that we don't have yet. So I took the current information we had, such as things like the revenue for the company revenue from 2018, 2019, and so on. And I forecast that out with these percentages here. And these percentages are basically based off of what we believe to be fair percentages from like competitors and just market trends in general. And that forecasts all these numbers out here. And eventually that number is discounted and brought into a free cash flow number down here. And you convert that through a bunch of other things, which I'm not going to go into this number here. And this number basically represents all of these numbers in this future value into today's present value. And this is what we're saying the equity value per share is worth based off of all this future value stuff, such as the forecasted revenue and everything like that today. So based off of financials alone, we believe that Constellation Brands is worth a per share price of $226.68. And another thing I said too is you can't just base your investment theses off of this number alone, because there's other things you have to take into account too, you know, such as general market trends and stuff like that. Like, you know, accounting for something like COVID-19 would not be priced into this, for example. So there are other decisions you have to make as an investor alone, not just looking at this number and deciding it's a good buy. But it definitely helps us make our decision in determining whether or not it's a hold. If that answers your question.
Mm-hmm.
Could you, another question I guess I have is more so, they've been talking about, I mean, I've been going to this thing since at least my sophomore year. that they've been talking about premiumization for a while now. And I guess maybe like this isn't a criticism. This is more so just like how much room is there left for them to quote unquote, premiumize? Like in terms of, I know they've been selling off a lot of their cheaper wine, but like, can you talk more about what their plans to increase their premiumization?
I can touch on that. I think with them expanding into the cannabis market is an opportunity for that premiumization trend for Constellation Brands. We talked about the THC infused drinks. I think when those become more mainstream in the United States, they could capitalize on the opportunity to have those be the premium THC drinks rather than just your, other, brands that might not be catering to that trend. So I think the cannabis market is definitely a huge opportunity for them to continue that premiumization image.
Not the answer I was expecting. That makes sense.
Yeah, and like I said before too, like the ceiling for this is really just the market itself. When we talked to them, they were very optimistic about premiumization in general, just because of the trends that they've been showing. I wish we put a graph up here to show it. But basically what they're seeing is more consumers shifting from that, Coors Light, like I said, Bud Light, to buying that more expensive beer. So yeah, I mean, there's no exact number that's forecasted out here, but it's an encouraging trend for sure. When you're looking at a company like Constellation Brands, and as Jack said, the canopy infused drinks definitely help too.
Other questions? There's got to be some more questions here.
I actually have something to say. I was looking at their income statement and their miscellaneous expenses have gone from 319 to 4,000 or 4 billion. What do you guys think of that? And also their minority interest is going up. So that's an expense that we just have to watch out for. And also the PE ratio is at 40. So I would watch out for, or I would buy at the market sell-off at the end of the year if that's possible. If you guys don't do that, because I don't really know. But yeah, so what do you guys think about that?
As far as the interest goes, like we said, they have a decent amount of debt, and they've been making the expenses have increased because they're increasing their payments on this debt. For example, one thing that I think we showed earlier was their increasing cash. Their cash flow increased pretty greatly in the past quarter. That was because they weren't doing things like marketing for things like, your NBA games and all those spring sport events that you would normally spend money marketing for. They had leftover cash because they didn't have to spend money for marketing because there were no events going on. So what they've been doing is allocating that money rather than, spending it on those commercials and advertisements. They've been allocating that money more to pay off their expenses, which is why you probably would see the increase in paid off expenses and decrease in liabilities. And what was your question about waiting for the sell-off at the end of the year? I'm not sure what you meant by that.
So at the end of the year, usually institutional investors sell off for tax purposes. And that's a really good buy point for smaller institutions and individual investors. So
Right.
That's something to consider, especially considering the PE ratio right now.
Right.
And go ahead.
Yeah. So just because this is like we're saying that they're a hold based off this isn't a buy pitch. We're saying that
okay. So you're
general,
not gonna. Yeah. Okay. I thought you guys were talking about how you wanted to buy more. Okay.
No. Yeah. But with that in general too, it is very difficult to try and time the market, and we're the way that we try to think is more long. So long term here, we just think that.
No, yeah, definitely. I mean, if you guys got them at a good price point and they're going up, I do think they're going to go up.
Yeah.
Also, I would watch out for acquisitions. I think that too much market market segment is a lot for a company. Peter Lynch calls it diversification. So I think it was a good move with the cannabis drink and that company, especially considering that with the presidency and a lot of states legalizing marijuana. I think it's great. But I also, what do you guys have to say about, okay, the miscellaneous expenses on the income statement have been going up since 2011 substantially, and usually that's a bad sign in some way. I honestly don't even know. You have to look at the footnotes on the 10K, but what do you guys think of that?
So I'll tell you about the miscellaneous expenses. We looking at their 10K, and like they passed our stress test. I could even pull it up now. So what we did was we basically ran a stress test that looked at the company's assets, and here, I'll pull it up for you. So this is all like the things like such as the company's current assets, their liabilities, their expenses, and we priced that down to see how it would handle stress, and it passed all those the stress test as far as we hold it at SMIF. They passed it. As far as the miscellaneous expenses go, I'd honestly have to look deeper into what each of those expenses are. But over time, I would assume that as they make more acquisitions and they have more costs, like, you know, for paying things for such as like the names of holding certain beers, they're probably gonna have to have more expenses.
Yeah, I think that's what it is.
Yeah,
I think that's what it is. And that's why I'm saying maybe the company's building upon itself. It's just something to watch out for. But from judging from what you guys said, it sounds like a hold for sure. So yeah, just that was my question. You answered it for sure.
Guess it's a really good pitch. We yeah, definitely one of the better ones we've seen this year.
Joey, what do you think?
You're talking to me, Professor Boyd?
Yes.
I like Constellation Brands overall. I've personally been looking at their stock for a while. Compared to other distributors, I think it's a solid buy. I personally would buy it right now. There's definitely room to grow, especially with the Canopy Growth. I looked at that stock as well. I think there's definitely room in the US market for sure with the infused alcohol. I know a lot of people would like that, especially if it's federally approved. So I would definitely buy that.
We got 12 more people still to.
They are away from their keyboard currently.
Yeah, most likely. Okay, clear. So we hold on to Constellation Canopy until next year. Good job,
Correct.
guys.
Very well done.